Hey everybody, and welcome to Project Premium Harvest. My name is Matt. In today's video, we're going to make a determination. Can we retire off of Kurv's AMZP, right? Or can we live straight off from the distribution? Are we going to have to reinvest any of it? What's the distribution going to look like? What are taxes going to look like, right? Is this distribution rate on the screen accurate to what the numbers that we're going to calculate, right? We're going to come to find all of those different types of metrics and data as we look at my spreadsheet, but we're going to look at some high level stuff first, right? So Kurv, right, and AMZP specifically, they run options against the stock Amazon, right? And the difference between Amazon and Kurv, or not Amazon, but yieldmax and Kurv is that yieldmax, they're paying you as much, they're paying you the time decay of the option instead of what Kurv does, which they protect some part of your capital by also running options to then pay you out as a distribution. Right, so there's kind of two different mentalities for those funds, right? Yield max, they're maximizing your yield at the expense of capital, versus Kurv, they're kind of trying to find that right balance between NAV erosion and then distributions that they're going to pay out to the customer, which is us, right? So on the screen here, we're seeing that Kurv, they advertising a 27.54% distribution rate. You know, once we crunch my numbers, we're going to determine, is that accurate? I think it's, from what I looked at earlier, it's relatively spot on. So let's dive into Robinhood and pick some numbers. All right, now that we're at the Robinhood brokerage screen, right? I'm not just some guy that makes YouTube videos. I actually invest in these high income ETFs. Currently, my account's at $94,071, but that's not why we're here. Let's go dive into the AMZP numbers. AMZP. Cool. So right now, AMZP is trading at $32.39. Right, in the after hours, we're down about 3.31%, but let's take a look at since its inception. Right, so this fund has been out for more than a year. So let's go a little further than that. Right, initially when I was making these "Can you retire on" videos, I was using the at inception price, but I was getting quite mad that nobody ever actually buys on the at inception price. So what I did here is, I think we're not going to use 25, but I think maybe like $25 a share. I think maybe a good like medium is like, we'll go with $30 a share here. And then we're also going to calculate a worst case scenario. We're going to buy at the peak, you know. Let's go to a year. Yeah, so we'll use a peak of $34.02, right? And the one thing you guys know about stock market, right? Whenever there's like a 52-week high, there's going to be some sort of pullback, right? And it's evident here, right? We hit a 52-week high, and then what happens right afterwards? Big time pullback, right? We hit some sort of high, bit of a pullback, we hit a high, some more pullback. So whenever you guys see a chart and it's like, man, these numbers are all-time high, if you just wait a little bit, maybe a week, maybe a month, the prices are going to go down. But at the end of the day, if you're just trying to go for the distribution and you're going to hold it long term, then your buy-in doesn't really matter, because if you hold it for more than a year, that 52-week mark is probably going to be the new 52-week low, right? So yeah, now that we kind of picked our data points, let's move over to the spreadsheet. All right, guys, now that we're at the spreadsheet and the charts, let's dive into it, right? So this first column here, we're looking at AMZP at a $30 investment, right? We bought in at $30 a share. And then for this other column here, we're going to assume that AMZP is going to be, we're going to buy it at $34.02. Let's talk about the first column, right? This is like the average of what AMZP has been trading at for the last, 12 months. So what did I do? So I took every single distribution payment that AMZP paid out, put it on this chart, and that's a total of $6.2293 per share. So that was paid out to the customer or us if you owned it since inception. All right, so it's about 15 payments, right? And if we look at that as an average monthly payment, let me zoom in so that we can not hurt our eyeballs here, right? But if we look at that as a monthly distribution, that's about 41 cents per month per share, right? And over a 13 payment year, right? Because if you do, 52 weeks divided by 4, because these funds, they pay out basically every 4 weeks, right? That is going to be, you're going to receive a premium of about $5.39. And that's a distribution rate of about 17.99%, right? So what Curve had on their site being at like what, 27%, not necessarily as accurate. It also depends on when you buy in at. Cool. So now let's talk about NAV erosion or NAV appreciation, right? So if we bought the shares at $30 a share and the current share price of AMZP is about $32.39, right? We were up $2.39 in value. So that's about a 7.9% gain, right? So let's just think about that, guys, right? We're investing into a fund that is appreciating in value, not like the yield max stuff that keeps going down, and it's paying you a distribution. It's kind of like a win-win here, but let's keep diving further, right? So that NAV percentage, we've appreciated 7.9% for the return of capital. So let me go to the Curve site so I can show you guys where you can see the return of capital calculation so that you understand, to get an idea of what to look at for taxes. But personally for me, for taxes, I kind of just do a blanket, 35%, set it aside, or at least make a mental note of how much I'm going to need to pay when it comes tax time. But yeah, let me go to the Curve site so I can show you guys where to find that information. So once we get to the Curve site, right, and you choose your specific fund that you want to invest in. So right now we're looking at AMZP. We're going to scroll down to the supplemental tax info, the 19A1. I'm going to open this bad boy. That didn't do anything. Let me open it again. And so let's open up the last one for 2024. So that's going to give us what the total return of capital was for the year, because it does it by monthly, but then it also gives you like a compilation at the end of the year, right? So if you look at that current distribution and percent of current distribution, right? That's just for the month of December, right? Let me zoom in actually. Yeah, so basically these first two columns here, those are more so for the December 2024, but when we're looking for the cumulative 2024, we just look out of the cumulative section, right? And so the way this works is the estimated net investment income, right, is 20%. So basically what this means is we're going to have to pay of the distribution received, 20% of it at ordinary income levels, right? And so the estimated return of capital, as we see down here, is at 80%. Yeah. So say you have a distribution of, $100, right? $80 is the return of capital. So you don't pay taxes on that $80, right? But then that $20 you have left over, you pay taxes on that $20 at ordinary income levels, right? So at $20, right, you're going to be somewhere in that 10% tax bracket. So you pay taxes like $2, right? But if you have, like $100,000, 20% of $100,000 is $20,000. And then you pay capital, ordinary income levels for that $20,000. So that's kind of how return of capital works. So now let's go back to the spreadsheet. Cool. And you guys can see here, that's what I annotated. So now let's go over if we invested at the absolute worst time for AMZP, right? We invested at $34.02. That was a 52-week high, right? And the way I calculated this is when AMZP was at $34.02, I just calculated the distributions from that point on. So that $34.02 was in December, right? So I counted it December's premium, and then I also counted January 2025's premium, right? So in total, that's $1.45 per share in distributions, right? So cleaned up the chart a little bit here. So the average yield for the average monthly payment that the customer was going to receive, which is us, is about 72, almost 73 cents per share, right? And if I were to estimate that over a 13 payment year, right? Because the way that these high income ETFs work is they have 4 weeks a year. Well, let's do this. There's 52 weeks in a year, and then they usually pay out every 4 weeks, right? So there's going to be about 13 payments for AMZP. So I calculated that monthly yield at 0.725, multiplied that by 13, and then we got $9.425, right? That'd be dollars per share. And if we look at that as a distribution rate, which is pretty similar to what we saw on the Curve site, right? It's about 27.7%. However, because we invested at the worst part and because there is a little bit of a dip right now, right? I have full faith it's going to go back up, but we're just going to run the numbers as is, as we see them, right? And this is the whole reason why I wanted to do this is a worst case scenario, right? We bought at the 52-week high, and then there was a severe dip downwards. So what does that look like? So the NAV erosion for that investment at $34.02 is going to be about $1.63, right? Because currently the share price is at $32.39, right? If you look at that as a NAV percentage, that's negative 4.7%. But this is only 2 months, right? And so for me, I'm going to project this and estimate it out for the year, right? We're going to talk about we already talked about the return of capital, right? 80% of the net distribution is return of capital, so you do not pay tax on it. Anything from the net, you pay at ordinary income levels. Cool. But over a year period, right? So I projected out here, maybe zoom in a little further. I projected out for about 12 months, and the share price is going to deteriorate about $9.78. If this current trajectory happens, I don't actually think it will, but we're just going to play devil's advocate so that we have two separate, scenarios to compare from. One side that's very average, very normal, and it's kind of what we're really going to expect. And it's one that's like, oh man, this looks really bad, right? Just so that we can kind of get like a potential worst case scenario. And if we look at that as a year NAV percentage, that is actually negative 28.74%. So not too great. So let's look at the numbers at the net. So this is what I was talking about. Can we retire it off of it, right? Can we retire without reinvesting? Can we retire off of this fund without redistributing the shares? In this case, for this 52-week high part, no, we have to redistribute the money. Otherwise, you're going to lose your initial investment, right? But you're not even making enough premium to keep up with the NAV loss. So let's take a look here. So the total net premium after, we take the NAV into consideration, we're still losing about 35 cents a share, right? And that's like a monthly yield. So basically you're losing like, 2.5 cents a share per month. That's what you're losing. And then the distribution rate, we're kind of running around negative 1%. Estimate of yearly premium, whatever the net premium is, that's what it is. Cool. Now let's look at the chart to see the different values. If we do a $1,000 investment, $10,000, $25,000, $50,000, $100,000, and $1 million investment, what are the numbers actually going to look like? So in this first chart up here, we're going to look as if the ordinary, where we invested about $30 a share, we still have a premium yield is about 17.99%. And then we had like a net distribution of 5.39. And we're just going to talk through those different types of numbers, right? So let's get started here. So for AMZP $1,000 investment, you're going to own about 33.3 shares. And that monthly income is going to be about $13.84. We annualize that. You're going to make a yearly income of $179.67, right? For $1,000, doesn't seem too bad, right? But let's talk about taxes real quick. So for that $1,000 investment, and we have 80% is return of capital, 20% is the net. So we only have to pay taxes on 20% of 179.67. So that's $35.93. And because it's $35.93 falls in this $0 to $11,000 tax bracket, we're going to be only taxed 10% at this rate. So that's only $3.59, right? Now let's talk about a $10,000 investment. So for a $10,000 investment, we're going to own 333.33 shares. The monthly income is going to be about $138.43. Over a year period, that's $1,796.67. Because of return of capital considerations, we only have to pay taxes on $359.33. Because it's this $359 falls in that 10% tax bracket, we only have to pay taxes on, we only have to pay $35.93 of taxes. Cool. Moving on to the $25,000 investment. For the $25,000 investment, we're going to own 833.33 shares. That monthly income is going to be about $346.07. And over a year period, that's $4,491.67, right? Because of return of capital considerations, we only have to pay tax on 20% of the net distribution. So that's $898.33. And because this falls in line with that 10% tax bracket, excuse me here, we only have to pay $89.83 of taxes. And then let me kind of point out another data point. If you actually look at what you're paying taxes on, that's really only about 2%. So some people want to throw this money into a tax advantage account. That's great, you know, but at the same time, like the taxes are relatively low where I don't think it's significant enough. And then for Robinhood, the 1099 consolidated forms are coming out February 18th. So I'll crunch the numbers and determine, is this actually accurate? So let's talk about a $50,000 investment. For a $50,000 investment, we're going to own 1,667 shares. Personally, I have about $40,000 invested. I have, I think, either 1,200 or 1,300 shares. But yeah, my monthly income, seems right on par, about that $692.14. Right, my last two distributions are actually pretty big and pretty nice. But if we analyze that over a year period, that's $8,983.33. Right, because of return of capital considerations, we only pay taxes on $1,796.67. That falls in line with that 10% tax bracket. We only pay $179.67 in taxes. Cool. Now the bigger numbers that everybody likes. So for a $100,000 investment into AMZP, we're going to own 3,333 shares. That's a monthly income of $1,384.29 and a yearly income of $17,966.67. Because of return of capital considerations, we only have to pay taxes on $3,593.33. And since that $3,593.33 is in that 10% tax bracket, we have to pay $359.33 of taxes. Cool, right? Pretty straightforward. Now for the $1 million investment, let's see what kind of exciting stuff is here. So for a $1 million investment, you're going to own 33,333 shares, right? That's a monthly income of $13,842.89. Man, that's a pretty nice sum of money. And you have no NAV erosion, right? So that's a yearly income of $179,666.67, right? Because of return of capital considerations, we only have to pay taxes on 20% of that distribution, which is $35,933.33, right? So that $35,000 falls in line between two tax brackets. So I'm actually going to take myself off screen so you can see the numbers. Let me move this over. Cool. Maybe I should zoom in a little more too. Enhance. Okay. Because let's look here. Because $35,000 fits into $11,000 one time, right? So that first $11,000 is going to be taxed at that 10%. And then anything after that $11,000 between that $44,725, which is going to be about $24,933.33. That's going to be taxed at that 12% bracket. So if you're not familiar with taxes, it's gradual. So the higher the number is, depending on where that number fits in, you're going to have to pay per tax bracket that specific level. Cool. So for a $1 million investment, you're only going to have to pay $4,092 in taxes. And you made $179,666. That's kind of crazy. I think this tax rate is off. Let me double check. No, that tax rate is spot on. All right, guys, now let's talk about the worst case scenario. So let's go over there. So I'm going to be honest here, going over the worst case scenario, there really isn't a point of doing it because guess what? We're going to have to reinvest this money for us not to lose money, right? And this specific view here, this is with the intent that you're not trying to reinvest the money, or you're reinvesting the money that you have to so that you don't lose your initial investment, and then you still have a premium received at the end of the month or at the end of the week. So for me, we're actually going to go to a compound calculator and then crunch these numbers in there to see if you're going to make money or not. And then I don't think we will, because the distribution isn't higher than the actual NAV erosion. So that worst case scenario, we're going to probably lose money, but we'll just take that compound calculator and look at the, for fun, we might throw those numbers in, but ideally let's look at the numbers as if we were to retire on the normal scenario. All right, guys, so I calculated the numbers here. So I'm just going to use the numbers that I have for my personal account. So I have about $40,000 invested. The share price I personally invest in is a little bit higher than this, but we'll just use $30 to stay consistent with the scenario. The share count, I have about 1,333 shares, and the distribution is going to be the same as what we were talking about earlier. So for a 1 year period, that's $5.3980 per share. And the NAV appreciation of about 7.9%. And then there's going to be 13 payments. Cool. So let's look at what the numbers look like. So after a year period, right, let's take a look here. So after a year period, the fund would gain about, $10,000, almost $10,400, right? So that's kind of cool. And then your premium has gained about, $100 per month. Right, now let's look at the 5-year marks. Let's go to 2030. So for 2030, after 5 years, you're going to have about, let me zoom in. Oops, expand that. Right, so after 5 years, we're going to have about $114,722.73 in the account, and then we're going to be receiving a monthly premium of $1,103. So that's pretty cool. Now let's imagine if we reinvested this out. Now let's imagine if we reinvested this for about 10 years. I know this whole scenario is, can we retire off of this fund? Technically, yes, you can, but then we're just going to try to play devil's advocate and then take a look to see, hey, maybe you're not at retirement yet, but maybe start investing in these funds earlier to kind of, expedite that process. So let's go to 2035. So for 2035, right, your account value is going to be about $266,847.16. And then that monthly premium is about $1,785.21. Now let's take a look if we invested, we'll just do another 10 more years. So we'll do 20 years in total. Let's go to 2045. I don't know if I have data that far. I do. Wow. Okay. So if we invested this into AMZP, if we invested into AMZP for about 20 years, the account value is going to be about $973,673.02, and that monthly premium is going to be about $3,148.45. Yeah, that's pretty cool. Cool. Now let's look at the I don't even really want to look at it, the negative portion, because if the NAV is declining and the distribution is not covering the NAV decline, you're going to make no money. You're just going to deteriorate over time. So basically, that's just kind of like a lesson where that is the risk we have into high income ETFs, right? Kurv and yieldmax, they don't actually own the underlying. They're just running synthetic options on these funds, right? So that's the one thing we have to worry about. End of the day, I'm not necessarily too worried about it. Only time will tell if these funds are going to be successful or not, and I'm willing to take that risk. All right, guys, that wraps up this video. I appreciate you guys for stopping by, taking a look. Hope that you guys can like, subscribe, leave comments. I read every single one of them, and I try to reply to every single one of them as well. But yeah, guys, enjoy your journey out there. Let me know what you think. Have fun. Matt out.